Good afternoon. Welcome to Halftime Report. Well known halfway through the trading session. I am Reema Tendulkar. With me, Sumaira Abdi. And still very much in a bear grip for our markets. Benchmark indices down about 150 points in the Nifty. Sensex is down about 360 points. There is a recovery in the Asian market. So Hang Seng has recovered more than 200 points from the low point of the day. It's just about flat now. The Korean markets too are just seeing a minor cut of about 0.2%. But out here in the Indian markets, forget a recovery. Any pullback is actually being sold into. The banks are faring a little better. So the Bank Nifty has a cut of only about 50 odd points. So that's down close to about 0.2%. And you have a couple of these banks, like an Innocent Bank is, higher in trade. A Kotak Mahindra Bank is a gain of close to about 1.5%. And HDFC Bank is up about 0.25%. So that's keeping the Bank Nifty afloat. And apart from that, you've got strength in the IT stocks as well. And Titan continues to shine in trade. Hi.
Hi, Reema. Good afternoon. So you've spoken about everything that seems to be doing okay.
Yes, I left the oil market.
Yes. But so that looks like it has soured the sentiment. That's the oil marketing companies. And if you look at actually the big drags on the Nifty, you'll see one by one, or the entire energy pack actually sulking through the day today.
Promised, and as always, it's the movers and shakers on top of the show, and oil marketing companies, HPCL, BPCL and IOC have gotten derated on fears that are we moving back into a subsidy sharing regime, something we had left behind in 2014, Sonal.
Exactly, Reema, and that is something that have turned most of the brokerages negative on all these three stocks. This is the major fear that all the investors are also worried about. So for example, Goldman Sachs has cut the FY 19-20 EPS for these three companies by around 5 to 30%. Not only that, they have also downgraded the stocks like HPCL and BPCL to a sell from a buy. IOCL, they've maintained their neutral rating. However, they still see a 11% downside for this particular stock. CLSA has lowered the FY 19-20 EPS by around 3 to 46%. Not only that, they have also cut the target price by around 30 to 44% for all these three companies. Citi also is very bearish on these OMCs right now. They have lowered the EBITDA estimates for FY 19 and 20 for all these three companies by around 25 to 44%. They've also cut the target prices by around 40 to 57% and have downgraded all the three OMCs to a sell from a buy. Deutsche Bank has downgraded all the three companies to a hold from a buy, and they have also lowered the target price by around 29 to 44%. The only brokerage that still is little positive on these companies is HSBC. They retain their buy rating, and they also think that right now they will earn zero marketing margins because of whatever is happening. But they think by FY 20, these OMCs will be able to normalize their marketing margins. So if I give you a synopsis, around 25 to 30% of hit on profitability will be seen for these OMCs, and that is something the investors are fearing. On the flip side, we can also see that ONGC and Oil India are also under pressure. That is because of the rub-off that we are seeing. Back to you.
Sonal, thanks very much for that. In fact, this was exactly the kind of optimism that the HPCL management, M.K. Surana, the CMD, tried to play up. He tried to put up a brave front, actually saying that permanently he didn't think profitability could be impacted, though in the short term, definitely there'd be pain.
I personally believe that this looks to be more a short-term measure rather than a policy intervention to that effect. And while it will have some impact in the profitability of the company in a shorter run, but we will try to ensure that the impact of that is mitigated by other means. And to that effect, the profitability of the company is least impacted by that.
Okay, and in an otherwise gloomy environment, one stock which is shining bright like a diamond is Titan Industries, still up close to about 5%. Mangla?
Absolutely, Reema. Shining as far as Titan is concerned, actually glittering as we speak, closer to the higher end of today's trading range. Now, remember, the stock had corrected about 22% from its record high up until yesterday's session. Last evening, we got the management commentary as far as the quarterly update for the second quarter is concerned. And there they sounded pretty positive. And Titan's not usually a company that overpromises. So there is reason to believe that their jewelry business in the second quarter has done well, as the management has said. And this after a relatively soft first quarter. There were challenges, but they have gone ahead and gained some market share, and the studded jewelry has done fairly well, which is also margin accretive for the company. Add to that, the strong growth that was seen in their watches division in the last quarter has continued, and they are pretty content with what they've done in the eyewear business. However, year on year, the numbers would look a little muted because in the previous year, there were some demand activations which are not there in this year. Overall, a good outlook as far as the management commentary is concerned on the economy, household income and consumer sentiment. Add to that, the stock correcting about 20% from record high is taking that stock higher today. Brokerages are fairly positive as well. The likes of HSBC as well as UBS have a target of around 1,050, while the others have 1,250 and 1,240 in terms of target prices.
Mangalam, thanks for that. Abhishek, what do you have for us on IDBI Bank?
Well, Sumera, LIC has made an open offer for 26% stake in IDBI Bank, and that is at a price of 61.73 per share. So this means LIC will have an outgo of close to 12,600 crore in taking up this open offer stake of 26%. Now, remember that the government of India actually holds around 86% of in IDBI Bank. What triggered this open offer is the fact that LIC had a preferential allotment of 42.4% equity in IDBI Bank. So LIC right now holds about 14.5 to 15% pre-transaction, and post all these transactions of preferential allotment and open offer, the stake will increase to 51% on the expanded equity base of IDBI Bank. Back to you.
Okay, thank you very much for that. Sugar as well is quite sweet, Manisha, today.
Oh, well, it is, and there are a couple of points to watch out for in this space as well. One, of course, is the bulk buying in the physical market seems to have picked up ahead of the festival season. That clearly has been supportive. And even as the government has allocated 2.2 million tons as a quota for the month of October, while it is higher than the previous month, the expectation is that the festival demand is going to be strong, and perhaps even this quota will slightly fall in sense of expectation there. The other most important one really is that as per the US Department of Agriculture report, we are looking at a lower sugar production this time around for the major producers like Thailand, Europe and Brazil as well. And that would give India space in the international markets to be able to export somewhere between 3 to 4 million tons. And that definitely has given a much needed boost for the sugar prices and sugar stocks as well today.
Manisha, thanks very much. And here's a CNBC TV 18 exclusive. GAIL plans to hive off the pipeline or marketing business as a separate subsidiary. Anshu Sharma has the latest on that one. Anshu.
Right, government has been saying that primary job of GAIL is to bring in the pipeline across India for gas transmission. Now, it wanted that marketing business of GAIL should be hived off or sold off and raise some money for the disinvestment plan of the government, as government has a plan of 80,000 crore rupees under disinvestment. Now, we understand from sources that GAIL has set up a team and has also hired a consultant to suggest as to how to separate the pipeline and the marketing business of the company. Now, remember, GAIL already has a subsidiary called GAIL Gas, which is working for city gas distribution. Now, the company says that the balance sheet for the pipeline and the marketing business is already separate, but they are looking at which business could be the subsidiary, whether the pipeline or the marketing business. Now, we sent a query to the company and it is yet to respond, but we'll have to wait and watch out as to which part of the business will become the subsidiary. Back to you.
Anshu, thanks very much, and thanks also to our research team for stopping by. Here's a quick recap of the top buzzing stocks. IOC, BPCL, HPCL, all at the top of the losing pile. Titan, IDBI Bank, sugar stocks like Balrampur Chini, Dhampur Sugar, Dwarikesh, Sri Renuka, and finally, there is GAIL as well.
Okay, HDFC Bank has also come up with an update on what growth has looked like for the bank in the quarter gone by. Abhishek joins us for that. Abhishek, loan growth looks intact at close to about 25%.
Well, actually, the loan growth is the best in last 3 quarters. So just to quickly run through numbers, the advances of the bank stood at 7.5 lakh crore. That compares to about 6 lakh crore in the previous year, same quarter. So on a YOY basis, the loan growth is at 24%. And even if you see on a sequential basis, the loan growth is at 6%, which is pretty strong. Even in the last quarter, the loan growth sequentially was at 7 to 8%. So last 2 quarters, while the sequential loan growth has picked up, in the last 3 quarters, if you look at YOY comparison, this this 24% stands on the higher side. The low-cost deposit ratio is at 42%, and that has improved sequentially from 41.7 to 42%. So if you look at strong loan growth, coupled with the fact that low-cost deposit is rising, the net interest margin should remain fairly healthy for the bank. And I cannot comment on what the number would look like, but it may remain fairly healthy given the fact that the loan growth is pretty strong. They've also purchased about 6,000 crore of home loans from SDFC Limited. Back to you.
Well, no sign of the selling ebbing on the market. So 10,440 odd on the Nifty and sub that 34,750 mark on the Sensex. For now, the big cue, of course, will be the monetary policy. The central bank is widely expected to hike rates for the third consecutive time this afternoon. So CNBC TV 18 caught up with market participants, economists, and 80% of the people who have been polled by us believe that the Reserve Bank will hike rates to the tune of 25 basis points. Ritu Singh, who conducted this poll, will now take us through the key findings. Ritu, over to you.
Well, the market participants that we polled seem to have factored in a rate hike from Reserve Bank of India in this monetary policy. In fact, 80% of the respondents that we polled said they expect at least a 25 basis point rate hike from the Reserve Bank of India, largely owing to the economic pressures that we're currently seeing both on the crude oil front as well as the rupee front. We asked them if, this will be the end of the rate hike cycle, but no, majority believes that there could be a 50 basis point rate hike in the financial year FY19, including the October policy. We also asked them if they expect any action on the SLR front. That is expected to be maintained, status quo. But any more measures to ease liquidity in the system, we asked our participants if they are expecting any, but the majority said, given that, RBI has already announced a few measures, it is unlikely that more will be announced in the October policy. On the macro parameters, majority expects the 7.4% GDP forecast to be left unchanged at 7.4% for FY19, but the second half CPI forecast, that is the retail inflation forecast, is likely to also be left unchanged at 4.8%. Some are, however, divided that it could be raised or even lowered in this policy. That remains to be seen. Majority also expects RBI to continue with its neutral stance, but perhaps with, a more hawkish tinge. The tone is also expected to be similar to what we've seen in the last policy. But, overall, it wouldn't be surprising if after two consecutive rate hikes, the repo rate is increased yet again for the third time.
Okay, brace yourself for things to get more expensive, EMIs to get more expensive. Lata joins in to give her assessment of what the RBI can do given the current market scenario. Lata?
It is a 25 basis point that has clearly been priced in. In addition, as well, a change in stance is expected. So if a 50 bips hike comes, and that fear is there, especially after crude went over 86. Yesterday, that fear was all prevalent. If it doesn't come, actually with the 25 basis hike and even a change in stance from neutral to hawkish, the market may actually rally. Normally when a hike happens, you should expect the yields to rise even further. You may actually see the opposite reaction because it will be a relief from a 50 bips hike. As well, the change in stance, which everyone is expecting from neutral, because you can't have 3 rate hikes in a row and still remain neutral, as also because people expect that the Reserve Bank will have to hike yet again. Therefore, the change in stance is expected. And if that comes, the market will almost work with a certainty for the next hike, either in December or in February. But more importantly, the market is going to look at other statements coming from the Reserve Bank. The statement should be rich on how it looks at the debt problem, the corporate debt market issues. Any statements on liquidity will be welcome, though actually on liquidity, the RBI has already put its cards on the table by announcing an OMO, open market operations, for the entire month. So, they have advanced their announcements. And the other important point is anything they want to speak about the rupee, any indication that they are doing this rate hike simply because of rupee and financial stability. The MPC's mandate is inflation targeting, but RBI could well interpret its mandate as financial stability. So anything they say on corporate debt market, anything they say on NBFCs, maybe if they say, and of course on the currency, will be watched very closely. I'm not very sure they will. And finally, people will watch for any cues on growth. The market is under the assumption that because of higher fuel and higher interest rates, the growth in the second half may slow down. So while the poll is not indicating that RBI is going to change its 7.4% growth forecast, I mean, a majority don't believe it, that is another thing the market will very much watch out for.
All right, Lata, thanks very much for that. In fact, earlier, Lata also caught up with the Citizens Monetary Policy Committee to talk about the emphasis that RBI should give to the credit markets this time around.
It's not just a question of fragility, it's also the question of loss of confidence. And at the moment, I think the confidence issue is the one which really needs to be addressed. There are just too many pieces of bad news floating around, and there is a feeling of being unanchored, and that needs to be checked. Now, whether or not this has to be done through obvious, overt policy steps, or it can be done through actually laying out a roadmap for bringing back financial stability, is really the question that the MPC has to address.
Okay.
Do we need to do knee-jerk reactions now, or can we wait?
Okay. Well, to be fair, the Reserve Bank has provided copious liquidity. Never before has the Patel RBI said proactively that they will put in 36,000 crores in the month, whereas their run rate has been actually 10,000 crores, or people were at best expecting 20,000 crores in October. They've proactively said 36,000 crores. Sonal, on that note, the market is also talking about a CRR cut. Is that an instrument at all?
I think, in the current environment where there are clearly supply side cost pressures in the form of oil and rupee, clearly a CRR tool which has both a liquidity as well as a monetary dimension, cannot be used. So whatever liquidity injection durable needs to be done will have to be done more or less via an open market operation, OMO buyback, which is what the RBI has announced. But CRR at this stage, a cut in the CRR at this stage clearly will be a very risky strategy, and so not the right thing to do.
Okay. Sajid, your comment on that, and more importantly, the market is also talking about a 50 bips rate hike, simply to reassure confidence. Other central banks have done that, as Sonal pointed out.
No, I think if you stick to the framework and focus on inflation 1 year ahead, I don't think that warrants a 50 basis point rate hike. And there's a fine line between being preemptive and cautious and, signaling a knee-jerk reaction or signaling panic. So I think what the RBI has done so far, 25 basis points in June, in August, that should be continued because these inflation risks have increased to the upside. At the same time, for those very reasons, we should not overreact on the liquidity side. There's a well laid out liquidity policy that the headline liquidity needs to be close to neutral and that durable outflows will be met by durable injections. This has worked well for the last 2 years. The more durable outflows there are, currency in circulation, FX intervention, the more OMOs we will see. I think the CRR is too blunt an instrument because these could reverse in the next 3 or 6 months.
But rate hikes, you're expecting only 25?
We're expecting in October 25 basis point rate hike, but a continuation of liquidity. I'll make a last point, Lata. I don't think there's a conflict here between growth and inflation because what the world is seeing is both higher oil prices and higher import tariffs. These are adverse supply shocks. Both things can happen in tandem. You will have higher prices and higher inflation around the world and lower growth. So looking forward, growth will not be a good predictor of where inflation is, which is why central bank jobs become more complicated when faced with multiple adverse supply shocks.
Now, all the indices are down close to about 1.5%. The mid-caps too are down close to about 230 points. Take a look at where some of them are collapsing. So PVR should come up for you on your screen. PVR has taken a sharp knock as we speak. REC is under pressure, so that should be up for you on your screen. REC is down close to about 3% there, but that pressure has come through just as we speak. Gen Irrigation too is slipping, so Gen Irrigation is down close to about 3%. And apart from that, keep your eye out on MRPL. That's down nearly about 8%. Oberoi Realty has seen a cut of close to about 6%. Goa Carbon's Q2 numbers on your screen. Revenues are down 25% year on year. The company this quarter has reported a loss compared to the profit a year ago. Their EBITDA has come down by 95%. The stock has taken a big knock, down close to about 5%. We try and touch base with the management to get a sense of what's transpired to result in an all-round weak performance from Goa Carbon this quarter. In the meanwhile, let's get you some more market opinion and try and make sense of the kind of panic that we're seeing and the sell-off that we've seen. Earlier today, we spoke to Sridhar Sivaram of Enam Holdings, who said that there is a potential to make returns over the next 1 to 1.5 years in this market. He added that inflation won't be much of a worry going ahead.
The opportunity right now looking very interesting. I'm seeing many companies with good cash flows, good earnings potential, and prices have corrected significantly. Is this the bottom of the market? I don't know. But if I stagger my purchases over maybe the next 1 month or so, maybe 2 months or so, I think there's a potential to make returns over the next 1.5 years, despite all the election uncertainties. Inflation, in my view, will broadly be within the RBI range. So I don't see any reason for RBI to, hike 50 basis points. And hiking for the purpose of currency in most other countries hasn't worked. So I would say 25 is sort of priced in. I won't be surprised if they don't do anything, but I may be not in the consensus view right now, where I say that it could be a pause also.
All right, let's get a technical check on the market. Then Ashwini Gujral and Kiran Jadhav join in. Gentlemen, good afternoon to both of you. Ashwini, let me come to you first. Second day of almost a near secular downtrend. If the RBI verdict is unfavorable, technically, how much lower do you think the market can go?
Well, the market is going lower even before the RBI verdict. See, my point is very simple. What is the risk reward? After a fall of, I think, 550 points now from the last 3 days, I mean, what's left to, fall now? So as far as I am concerned, I think taking a risk on the long side may be worthwhile. There may be, 40, 50 points lower on the Nifty, but clearly the way banks are acting, the way a lot of stocks are acting, it looks like, some sort of, extreme situation is coming. So I would be long on the RBI policy. Chances are, whatever comes out, the market will probably take some positives from it, because even to sell again, you need some sort of a rally. So definitely these are not points of time where you sell into the market. If you want to do something, maybe buy in. Having said that, individual stocks, Indiabulls Housing is a buy with a stop of 970, target of 1020. Sonata Software is a buy with a stop of 340, target of 355. And JSPL is a sell with a stop of 186, target of 174. And all you need for a turnaround is, TCS to go up 1%, Reliance to probably recover its losses. So the hurdle rate is coming off, the lower you go. So that's what you need to figure out, that if a market becomes so easy that every morning you come and go short and it falls 170 points, there's a limit to that game.
Ashwini, what about auto names like a Bajaj Auto or Hero MotoCorp? They're trading at 52-week lows. Have they fallen enough? Would you recommend going long on them?
See, autos are a weak pocket. Why? Because last 3-4 years have been good for autos. And maybe, they could go down even further. But, things like financials, etc., private banks, they, I think, have done quite a bit already. So, not everything may bounce. Get into stocks where there are short positions, where larger institutions are always interested. So, maybe a bit of NBFC, a bit of, financials, maybe some, IT. Stick around with the large caps, and that should work out in case we are going in for some sort of a pullback.
Okay. Kiran, what about you? What are the trading ideas for the afternoon?
Yeah, well, afternoon. My first pick is a long and one short. I'll go with the long first. Apollo Hospital is a long call from my side. The stock looks to be insulated from the current fall that we are seeing, and these are stocks which we should look at when if at all the market stops here and starts giving a pullback. In that case, we believe that 1050 would be a very good stop loss. and today's target would be 1080. However, if someone has a positional call, we could well see a level of 1150 as well. So that's a good long side call that we have. One short call is REC, where we have seen a surprise kind of U-turn in the last 1 hour of trade, and which basically tells us that the longs have been trapped. And with the chart pattern that we are seeing, we believe that a stop loss of 103.50 should be placed, and target of 98 rupees 50 paise expect by the end of the day.
Okay. Thank you very much for joining in. Let's get the early rates from the European markets. Most of Asia had a weak start, but then they managed to recover towards the close of trade. And Europe, after having a rough session yesterday, you had the CAC and the FTSE down close to about 1.5%. This Friday morning, it's in the red, but not by a whole lot. So across the board, you can see some very minor cuts, down about 0.1 to 0.2%. We'll do one thing. We'll slip into a very short break. We'll come back and address the Goa carbon numbers. As you could have seen on your screen, the EBITDA was down 95%. It was clearly a weak set of earnings, but you saw that management commentary that on the back of unviable export orders as well as domestic orders, their plants were shut down. So we'll get chatting with the management. Srinivas Tempo, the chairman of Goa Carbon, joins in on the other side.
Goa Carbon has just released its earnings for Q2. The numbers are looking quite weak, in fact, and look at the stock. It has corrected quite sharply now, close to that 593 odd mark. Joining in now, we have the management with us. Srinivas Dempo, the chairman of Goa Carbon, joins in. Mr. Dempo, good afternoon, sir.
Good afternoon to you.
So we read your commentary that 3 of your plants were shut down between 20 to about 90 odd days, which led to this performance. Is that the primary factor because of which you've seen this kind of loss in terms of your EBITDA as well? And what's the visibility that you now have on orders?
Okay, so we've had a very challenging quarter, and you may be aware that this is primarily due to the Supreme Court imposed ban on import of pet coke. That is our raw petroleum coke, which has been banned as of 26 July of 2018. What it has done is basically 2 things. One is, of course, we aren't able to get a consistent supply of raw materials. So whatever we have in stock has been used to, service our existing buyers. And as a result of which, we aren't able to take extra orders. That's why you can see that our production has gone down compared to the last quarter as well as the same quarter of last year. And it has also increased our cost of raw material because, in this industry, the blending is very important. And we aren't able to import low-cost raw material to blend so that we make our orders more profitable. So it's a double whammy for us. One is, of course, we can't import raw material. And secondly is we can't do the blending process as we wanted to, increase our margins.
Okay. Srinivas, so this Supreme Court ban on pet coke stays, right, even as we speak today?
Yes, absolutely.
Okay.
It does stay, and now there is a hearing on the 9th of October.
Okay.
So we're just keeping our fingers crossed.
Okay. And if the stay is not lifted, what kind of a performance you're going to have, going ahead?
Ima, if the stay is not lifted, it's going to be very disastrous. We will be able to keep the plants open till only about November. We do have pending orders worth about 100 crores. And we will be able to service most of them because we do have raw material. But as I explained earlier, in a reduced margin because we aren't able to blend the lower cost raw material, which was in pipeline for us to come. And we are not able to take additional orders.
But in that case, is there any sort of a viable option to this importing this cheaper pet coke that you needed to blend? Are you in the process of some R&D or finding some sort of a viable alternative?
There was a question raised in the past whether we could use other materials, but unfortunately there's no substitute to raw petroleum coke. And not only us, right now there is no substitute to aluminum smelters also. Without calcined pet coke, they can't do the smelting process.
Okay.
So it becomes absolutely important for aluminum and of course for us the RPC, which, We have tried other materials, but there are a lot of issues like sulfur and other issues which doesn't allow us to use any other material. And for your information, the aluminum hearing also is coincidentally fixed for the 9th of October in the Supreme Court.
Okay. So 9th of October is going to be a very critical date for the future of Goa Carbon. But Srinivas, in light of the challenges that you're facing, is the company looking to cut costs? Have there been any layoffs? And secondly, would you look to cut back or roll back your dividend for FY19? You had announced a final dividend of 10 rupees. Will FY19 not see a similar dividend?
Currently, if you put both the quarters together, we are still profitable.
Okay.
But at the same time, it's too early to say about both cutting in terms of dividends as well as labor, because we are hopeful that something positive may emerge on the 9th of October, based on the arguments that we put forward, that we are basically using this raw material as a feedstock and not burning it as fuel.
Okay, Srinivas, we'll leave it at that. Thank you very much for joining in. That's Goa Carbon for you. Impacted significantly on account of the Supreme Court's ban on pet coke, which is effective from the 26th of July. The next hearing will be on 9th of October. We'll find out whether the Supreme Court lifts this ban. If it doesn't, as the management says, their plants can remain open only till November if the ban is not lifted. They have pending orders worth only 100 crores, which the company can service as of now. Goa Carbon stock is down close to about 5%. By the way, the Bank Nifty is now back in the green. Ashwini was calling for a pullback in the Bank Nifty earlier today, and now the Bank Nifty is absolutely flat, so just down about 8 odd points. In fact, just a minute ago, it was even showing you a green tick. HDFC Bank is pulling its weight on the way up, so that's being bid up. HDFC Bank has even crossed its, is hovering around its 200-day moving average of 1984. That's higher by close to about 1.5%. So that's clearly seeing some amount of buying interest. IndusInd Bank too is up in trade. Keep your eye on Equitas. That saw a couple of block deals which were totally worth about 0.5% in terms of equity, and Equitas is moving higher by 3.5%. Good volumes. Let's move away from the gloom and doom that the equity markets are projecting. In fact, there has been another sell-off, so now it's 10,430 on the Nifty, while the Sensex is down close to about 430 points. So the picture is not looking good. There was a pullback in the Bank Nifty, but you can't say that about the benchmark indices. Bajaj Finance has taken a leg down. M&M has lost close to about 5% in today's trade. Eicher Motors, Yes Bank, Tata Motors. So there are now a lot more stocks which are on the way down, not just your oil and gas names. But for a brief moment, let's talk about the commodities, the sell-off that we've seen in the metal complex as well. Manisha Gupta joins in as always. Manisha?
Yes, after 5 days of constant gains in the metal space, we have started the day today on a weaker note. It is profit-taking because all the 4 days in the global markets, you did see buying come in. But, the markets now are looking at the strength in US dollar. It has been about the US and China trade tensions, the US interest rate hikes, the China slowdown, and of course, the kind of demand that we are seeing slowing in the European markets, that seems to be bothering the space as well. It is, of course, about the individual fundamentals where we have seen the copper and aluminum prices hold around those 3-month highs. Aluminum actually is headed for nearly 5.5% gains in this week. So the individual fundamentals are still on the stronger side. It is really about the macro picture, the global sentiment cues that really seems to be bothering that space right now. But trading strategies, and we have Himanshu Gupta joining us for that. Himanshu, hi, good to have you. How have you seen the metal sector? We did see quite a bit of a buying coming in for this week. Hasn't been able to hold on today for many of those metals. Is there a buy strategy that you see here?
Hi, Manisha. Very good afternoon. Well, clearly, it was very, very obvious. If we talk about 2 or 3 weeks back, the prices were very oversold for select base metals amidst the impact of trade war that could have on the demand of the base metals. And we have seen a very strong, I would say, a technical recovery rallies in most of the metals. Having said, I think when ahead of China that joins after a break for this week on Monday, I think there is a very high possibility that after a sharp rally, we see some kind of profit booking and shorting at higher levels. So I expect some metals to have witnessed some corrections hereafter, and therefore would be looking to go short at higher levels.
Anything in particular that you're picking up? And aluminum, of course, is the only sole green metal that you can see trading firm. Everything else seems to have declined.
Well, aluminum also, as a matter of fact, we have seen some sharp sell-off in the late evening yesterday itself. So I don't think these gains to sustain in today's session as well.
Okay.
And in particular, talking about the metals like zinc and copper, I think they are the metals that have seen a very strong, sharp run-up over the last couple of sessions. I think some profit booking is on the card, and I would be looking to go short on both the counters on some recoveries.
Okay. Himanshu, how are you also looking at the precious metal space? Because even as the gold prices are headed for a decline this week in the international markets, the Indian gold prices are up more than 2%.
Well, absolutely, Manisha. Gold and silver prices have defied all the odds, fundamental odds, even after the hawkish stance of the Fed. It's the Italy fiscal deficit concern that has actually led to the safe haven buying in gold and silver, and $1180 has actually held for this point of time. To add on, the weakness in the rupee has actually further added to the gains in the gold in the domestic markets. I see some more upside in gold in the immediate short term, and therefore would be looking to go long in the counter. In the international markets, I think 1206, 1208 is an immediate resistance. But in case that is taken out, I think prices can head higher towards $1220 to $1230 in the immediate short term.
And one word on the crude oil prices also, because after that sell-off that we saw in the New York session, the Asia seems to be buying on those declines, more than 0.5% up as we speak right now. Are you back into buying side?
Well, yes, Manisha, I think some profit booking was seen yesterday in lines with entire commodity market when we saw some profit booking. But it was, of course, it was linked to the Russian and the Saudi Arabian statements coming that they will be looking to go increase their production in order to offset the Iran sanctions deficit in the market. But having said, I think ahead of the deadlines and the sanctions lined up in the month of November, I think every decline is a buying opportunity, and I do not expect the WTI prices to slip below $73, $74 in the immediate short term. Okay. So as far as the trading strategy is concerned, I think one can go long around 54.40 in today's session for a target of 55.50 that can be extended towards 5600 as well, and a stop loss below 5400 would be recommended.
The market pretty much close to the lows of trade. The market breadth has actually continues to worsen a tad. Now on the NSE, there are two stocks which are declining for every one stock which is advancing, and you can see the separation between those lines growing a little bit wider. In terms of stocks, look at PVR. That stock has taken actually a tumble in the last 10, 15, 20 odd minutes and is now at the low point of the day. In fact, it's lost about 3-4% in just the last few minutes. EIL is another one that is incrementally lost a little bit more. Then there's Interglobe Aviation, which is also now at the low point of the day. As well, some of these ADAG stocks, Relcom, Relpar, continue to see some cuts. Equitas on the upside is now about 4% higher. With that, we'll wrap up on Halftime Report. Do stay